Hello, everyone. Welcome to this week's weekly market view for Monday, the 7th of October 2024 to Friday, the 11th of October 2024. My name is Vishal. Let's get started. All right, so let's start off with the Nifty. Pretty interesting setups now being created on the market. Let's start with the key levels. So I have the 125-minute chart right now open in front of me. So these are the key levels of demand on the Nifty. This rally-based rally level on top of level. And you also see this drop-based drop. So this is where we are expecting the prices to bounce. And since this is a higher time frame level, we probably will be able to see some bounce coming out of this level. The high probability level of supply is at 25,737. So that's a little far away from current market price. So since we are closer to a level of demand, we would be more keen to see how the prices stack up in this level and whether we are able to get a bounce. Let's move on to the Bank Nifty now. If you look at the Bank Nifty now, we have, as we speak, we have hit the level of demand. So there is a little bit of bearishness now on this market, but it'll be interesting to see whether this level of demand holds or whether the market continues to move to the downside. We are in a level of demand right now. The higher time frame supply levels are a little bit further up, 52,810, 53,236. Then you have another level at 53,759 to 54,003. And then you have another supply zone from 54,003 to 54,456. So we have a string of supply zones now, and it'll be interesting to see now whether this drop-based rally level of demand holds or violates to the downside. In case if this level violates, this level will be a very, very important and key level of supply for the Bank Nifty in the days to come. Let's move on to the next index, which is the Nifty Financial Services. So the Nifty Financial Services has also hit a level of demand as we speak. Let me just go ahead and mark this level with a rectangle. And this level also. So we are currently in this level. Now there are two levels which are stacked upon each other. So we will have to wait and watch whether we get a reaction from this level over here or whether the level at the bottom. So there are a couple of open interest levels also lining up with this level. So it'll be interesting to see whether price bounces from this level and starts moving up, or we are going to see a little bit of a further downside on the Nifty Financial Services. So these are the key levels, 23,162 to 23,295 as a level of demand. And then 22,864 to 22,997, roughly around closer to 23,000 round number. As a level of supply, we are seeing 24,443, 24,619. And then we also have another level of supply here, which is a drop-based drop, which is again located at 24,878 to 24,988. Let's look at the next level of demand now on MidCap Nifty. On MidCap Nifty, we have this drop-based drop, 12,962 to 13,069. So seems like all the markets are slightly in a bearish mode, or let's say we are in a profit booking mode. And the lower levels of demand are 12,532 to 12,475 on the MidCap Nifty. So these are going to be the two key levels. There's a nice open interest level stacking up within this level of demand. So let us see whether if price does hit this level of demand or comes a little bit more into this, deeper into this level. Let us see if we are able to get a bounce on the MidCap Nifty. Let's move on to the next index now, Sensex. So Sensex, we have a level of demand slightly below, which is this drop-based rally, 8,465 to 8,300 odd levels. The level of supply is 84,116 to 84,765. So level of supply is far away from current market price. So it'll be interesting to see how this level of demand plays out in the coming trading sessions. And last but not the least, let's go to Bankex. So let's load the Bankex chart here. So we'll have to move into BSC and Bankex. Okay, so very interestingly, Bankex has also hit a level of demand, which is 57,500 odd levels. Interesting to see how Bank Nifty also now shapes up, because it is also within a level of demand. So we have Bankex and Bank Nifty both hitting this level of demand. And if this level of demand holds, then we will start seeing a bounce again to the upside towards the 59,900 and 60,400 handle on the Bankex. So these are the key levels now to watch out for this week on all the indices. Now let's move on from the indices to the index heavyweights. So let's start first with Reliance. And let us look at the key levels of Reliance on the 125 minutes time frame. So on Reliance, we have a level of demand located at 2706 to 2642. This is again a level on top of level scenario, drop base rally. Also, we have open interest of 2700 lining up here, which probably gives us a little bit of hope that prices might stall at 2700 levels and may not find it very easy to break the 2700 handle. And what is also more interesting now, as Reliance is coming into a daily level of demand, we have Nifty also coming very, very close to a level of demand. So if Reliance bounces and starts moving up, that is again going to accelerate the move in the Nifty. All right. So keep a close watch on this level over here, 2706 to 2642 on Reliance. And we have supply zones on Reliance at 2925 to 2952 and 2946 to 2985. So keep a close watch on these supply zones. More or less, these supply zones are also lining up with the Nifty supply levels. Let's now move on to the next index heavyweight, which is HDFC Bank. So let's look at what HDFC Bank is telling us or trading at. So HDFC Bank had a nice rally, right, from 1600 levels all the way towards 1780 levels. Now we are seeing a reaction of HDFC Bank from this level of supply, and more or less, we can clearly see that this was profit booking that came in, and now HDFC Bank is correcting nicely. So now all this is filled orders. So what we would like to see is we would like to see a push through all these orders coming into this level of demand. And again, we might expect to see a bounce coming from these two levels. Again, keep in mind, we have Nifty and Bank Nifty again coming closer to a level of demand. Bank Nifty is in level of demand, but HDFC Bank is still far away from level of demand. So in case if HDFC Bank becomes more weaker and pushes more to the downside, then Bank Nifty will also start pushing a little bit more deeper inside that level of demand. So this will help us to time the entry correctly on HDFC Bank as well as Bank Nifty at the same time. So keep a close watch on these key levels for this week. All right, so now let's shift our focus from the world of indices and stocks to the world of commodities. Let's start off with gold. So because of whatever is happening in the global scenario, the war situation, gold is the safe haven right now and is moving up extremely strongly. So it's extremely bullish right now. And the closest level of demand, so there's no supply on gold now. The closest level of demand is 74,422 to 74,010. If price retraces back here, we might see a continuation in gold moving up towards 77,000 handles. Let's look at silver. So silver has just tapped into a level of supply. Not really, but very, very close. But we also have this level of demand now in case if the war situation doesn't improve and prices continue to rise and crude oil prices also begin to increase, then we might see more money flowing into these asset classes such as gold, silver, and also some of the safe haven currency pairs like the US dollar, etc. So it'll be interesting to see what happens in the coming days. But the closest level of demand on silver is 90,225 to 88,372 on daily, and 95,495 to 96,565 supply zone on the daily chart. Let's move on to the next commodity, copper. So copper has hit a level of supply from last week. We had marked this level, and now we are just consolidating here. So we also have this 860 open interest level lining up on copper. So any kind of profit booking might come into copper, which might push the prices, a little bit lower towards this 830 handle. And then we might see again a continuation of the move of copper to the upside towards these levels of supply. So you have this one level of supply here, rally-based drop, and then you have another level of supply on copper, which is this rally-based drop. So this will be interesting to see how copper moves in the coming trading sessions. But at the moment in time, copper is in a supply zone, so we expect copper to retrace a bit. Let's move on to the next commodity, which is crude oil. So crude oil has also rallied up strongly, and we are in a level of supply on crude oil now. Now, we might tend to push a little bit deeper because we have one more level of supply, which is currently stacked up here. And in case, like I said, the war situation continues and the global crisis continues, then we might see rise in crude oil prices towards 65.75 to 67.47. So right now there is no nearby level of demand right now. So we are a little bit more bearish on crude because prices are in a level of supply. And last but not the least, let's quickly have a look at natural gas. So natural gas from last week also tapped into this level of supply, open interest at 250, 260 odd levels. So we are seeing a little bit of profit booking coming on natural gas. We see this nice reversal candle created over here. But again, the move might not last or it may not be very, very bearish because we also have these gap levels of demand 220 to 213 to the downside. And then you have 199 to 187 to the downside. So let us see how natural gas shapes up in the coming days. But most of the commodities now are coming into a level of supply, except for gold, which is making all-time high. So it'll be interesting to see how these commodities line up for this week. All right, so I hope you all enjoyed this week's analysis. And if you do like this weekly analysis, please post your valuable suggestions or your comments in the comment section. And if you're still not a member of the Sherfan Education YouTube channel, hit the like button and click the subscribe button to get more updates like these videos every week. Have a lovely trading week, everyone. Trade safe. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.